Do you have some specific questions about mortgage, real estate, or personal finance? What if you had an expert advisor to help answer those questions for you and put you on the right path? Well, in today's lesson, that's what I want to do, is go into our mailbag and go through some of the top listener questions from the last couple months. We have you guys email us questions after every episode, and I see the same recurring themes time and time again. So I wanted to pull those specific questions, show you what those are, and give you the full answers here in today's lesson. Check it out.
Josephine from Wethersfield, she writes, my home value has gone up significantly over the last few years, and now I want to sell my home and move. But with the soaring prices, I am not sure what to do. I am in a dilemma. Do I sell my house and buy something much more expensive, or should I stay put and wait?
Get with a mortgage advisor. As I always say, as soon as you can, as soon as this dilemma comes up, call a local mortgage advisor. Another idea that you can run numbers on is if you sell your home and roll some of the money over, but then take the rest and pay off a bunch of debt. So look at and find out what the numbers are right now and base your decision off of that. Now, the next thing is be patient. Fortunes can come to people that are patient and can wait for the right opportunity.
Daniel from West Hartford writes, thank you for such a great show. Your knowledge gives me inspiration. I'm wondering, though, how to handle the following situation. My wife and I need to add a second level to our first home. We determined that adding a second level would be more cost efficient than buying a new home. However, we would still need about $75,000 to do the renovation. We have approximately $200,000 of equity in our home. Unsure the best way to finance the renovation. Can you give us some ideas?
The first option that I would recommend with a case like this, based on what Daniel shared, is we want to look at a cash out refinance as at least an initial option to evaluate. Now, if a cash out refi doesn't work or the numbers just don't make sense, then another option that you could look at would be a renovation loan. So there are a couple different renovation loans that are available. The two biggest ones that I want to hone in on are going to be the FHA 203K loan and then the Fannie Mae Homestyle loan. Now, the differences between them are really going to come down to the type of work that you're doing. For example, the 203K loan does not allow a pool to go in or a luxury item, whereas the Fannie Mae Homestyle loan will allow you to build a pool or a luxury item into your home. So that could be one piece. The other thing is credit score. Daniel didn't mention what his credit score was, but I normally see the Homestyle loans working best for those that have over a 700, 720 minimum credit score. And the higher credit you have, the better terms on the loan that you're going to get if you get approved at all.
I got a few more here. So Jonathan in Hartford, he wrote, I bought my first home 3 years ago and have done well financially with it. It's worth about $80,000 more than I paid. I see real estate as a great investment, and I'm ready to buy my first investment property to rent out and start generating income. I have no savings or investments besides my home. So what is my best route to buy a rental property and start generating positive income?
So for Jonathan's specific scenario, he didn't say what his current mortgage balance was, or he didn't say like what his interest rate was, but just like you're hearing a commonality here, I think the first place I would start by looking is at the cash out refinancing. Because again, the equity is so high, it's going to give you a lot of liquidity with that by looking at that option. But the other thing that I think Jonathan will benefit from that many others I wouldn't recommend it to is potentially a home equity line of credit. Because in certain cases, a home equity line of credit could actually give you access to more cash than a cash out refi.
Guy from Burlington. I am 66 years old and plan on retiring in the next 3 years when my home is paid off. Unfortunately, I do not have a pension or investments. I'm going to have Social Security and about $50,000 of savings, but I know that won't last beyond a few years. My home is worth about $400,000, and I want to know if I'm a good candidate for a reverse mortgage and how it may be able to help me with retirement income.
So this is a case where I think Guy is probably the poster child for a perfect candidate for a reverse mortgage. So it seems like he'd be great for it. He's equity rich and cash poor. What I would recommend in this case is to set up a monthly distribution stream from a reverse mortgage line of credit to act just like a pension or just like an annuity would. Run the numbers with an advisor as soon as possible. Get the reverse mortgage in place while the home values are high. And you can get a reverse mortgage even if your home isn't paid off yet. There's a huge myth. People think you have to have a paid off home. I've had people take reverse mortgages that have 10, 15, even 20 plus years left. So don't make that mistake.
Jill from Vernon, she writes, my husband and I accumulated about $50,000 of credit card debt when he was out of work during the pandemic. We were able to finance in 2020 down to about 3.25%, 30-year fixed interest rate. Now the home values have gone up and we want to pay off our credit card debt using the equity in our home, but we're torn because the interest rates have gone up so much higher now. We were quoted over 5% to refinance our home and roll in our debt. Is this a good move or should we explore other options?
So you have to decide, is it worth taking one step back on your mortgage to take 3 steps ahead on your finances? And I think you'll find it is probably worth that. Also, don't forget that you can refinance the home in the future back to a lower rate when that occurs. We just don't know when that's going to be. You got to get through today to get to tomorrow to pay your bills. So that's why the higher interest rate might make sense. The other thing is, what are you going to do with the monthly savings? If you're saving $1,000 a month, I think you're going to see that the little bit of a hit you're going to take on your mortgage rate is going to really get you ahead financially on everything else, including your retirement. So there you have it, the most frequently asked listener questions from the last several months on the Mortgage Matters radio show and the Connecticut Real Estate Edge podcast. If you've got questions, we've got answers. So go ahead and shoot those in and we'll either answer you directly or put your question and answer on the next listener question episode. You can reach us at mortgagemattersradioshow@gmail.com. Again, mortgagemattersradioshow@gmail.com. If this is your first time watching us, go ahead and subscribe to the channel. Also, smash that bell so you get notified every week as we're putting out tons of new content and education for you. I do offer consultations, so if I can be of assistance to you or anyone that you know, reach out to me by call, text, or private message. 860-413-3938. Hope that helps as always, and we'll see you next time. Take care.